What if I told you that some of the world's smartest money managers, people who control hundreds of billions of dollars, are all betting on the same handful of stocks right now? That's not a coincidence. That's a signal. Welcome to today's deep dive into the top billionaire-owned stocks you should consider right now. I've pulled data from Dataroma, SEC 13F filings, and institutional disclosures to find the stocks that keep appearing across the portfolios of Warren Buffett, Ray Dalio, David Tepper, Ken Fisher, and more. Let's get into it. Before we get into the stocks, let me explain why tracking billionaire portfolios actually matters. Every quarter, large institutional investors, hedge funds, family offices, asset managers are legally required to file what's called a 13F report with the SEC. Platforms like Dataroma.com track these filings across 80-plus super investors, giving regular people like you and me a front row seat to where the smartest money in the world is flowing. Now, there's an important nuance. These filings are released about 45 days after quarter end. But here's the thing. Most of these investors have holding periods of 3 to 10 years or more. Warren Buffett himself says his favorite holding period is forever. So even if you're slightly late to the party, you're still investing alongside conviction, not speculation. So who exactly are the super investors we're tracking? These are some of the most legendary names in finance. Warren Buffett at Berkshire Hathaway, arguably the greatest investor of all time, managing a portfolio of over $274 billion. Ray Dalio at Bridgewater, one of the world's largest hedge funds. David Tepper at Appaloosa Management, known for making billions during financial crises. Ken Fisher at Fisher Asset Management, managing over $236 billion. Philippe Laffont at Coatue, a tech-focused powerhouse. And Bill Ackman at Pershing Square, known for bold, concentrated bets. When all of these investors agree on a stock, that's when we really pay attention. Let's now go stock by stock. Let's start with the undisputed king of billionaire portfolios, Apple, ticker AAPL. Apple is the single largest holding in Berkshire Hathaway's portfolio, worth over $59 billion as of early 2026. But Buffett isn't the only one here. Apple consistently appears across dozens of institutional portfolios. So why do billionaires keep owning Apple? 3 reasons. First, ecosystem lock-in. Apple's tight hardware-software ecosystem makes switching nearly impossible for its billions of device users. Second, the services segment. App Store, iCloud, Apple TV+, Apple Pay is now generating tens of billions in high-margin, recurring revenue annually. This is the kind of predictable income that value investors dream about. Third, pricing power. Apple can raise prices without losing market share. Buffett calls Apple not a tech stock, but a consumer products company. And consumer products companies with that kind of loyalty, they're priceless. Apple is held by some of the biggest names in finance. Buffett at Berkshire has over $59 billion in it. The Gates Foundation holds it, Ken Fisher, Ray Dalio, Chase Coleman, the list goes on. When the world's greatest investor says it's his best business, and virtually every super investor agrees, that's a powerful signal. Apple isn't flashy, but it delivers consistently, quarter after quarter, decade after decade. Stock number 2 is Microsoft, ticker MSFT. Microsoft saw total institutional inflows of over $335 billion in the past year alone. That's $335 billion flowing into a single stock. This is hands down one of the most widely held stocks among the billionaire class. Why do billionaires love Microsoft? First, Azure. Microsoft's cloud platform is growing at 26% year over year, and its OpenAI partnership has supercharged this. Copilot is now embedded directly into Word, Excel, and Teams, so companies that already use Microsoft products are now paying more for AI-powered Microsoft products. Second, the enterprise flywheel. It's nearly impossible to rip Microsoft out of an enterprise once it's embedded. And third, revenue visibility. Their commercial backlog hit $392 billion, up 51% year over year. That's future revenue already locked in. Microsoft is held by Bill Gates as its co-founder, obviously, but also by Ray Dalio, Stanley Druckenmiller, Philippe Laffont with a $2.5 billion stake, and Stephen Mandel, who added in Q4 2025. Microsoft dominates multiple trillion-dollar markets simultaneously: enterprise software, cloud computing, gaming, and now AI. That's why billionaires just keep buying. Stock number 3 is Alphabet, ticker GOOGL. Alphabet is loved by institutions because of a paradox. It's one of the most dominant businesses on Earth, yet it often trades at a valuation below the broader NASDAQ index. That combination of wide moat plus reasonable valuation is catnip for billionaire investors. Why do billionaires love Alphabet? Google Search is essentially a global monopoly. YouTube is the second largest search engine in the world, and Google Cloud is accelerating at 33.5% year over year, with a backlog that surged 82% to $155 billion. Then there's the AI angle. Google's custom TPU chips are so in demand that the backlog is exploding. Alphabet even crossed the $3 trillion market cap milestone in September 2025. And critically, even Warren Buffett, who was historically skeptical of tech stocks, initiated a stake in Alphabet. That was a massive signal. Alphabet's shareholder list includes some of the sharpest minds in finance. Buffett's new stake is perhaps the most telling signal. David Tepper at Appaloosa holds it as a core position. Chase Coleman at Tiger Global, Philippe Laffont at Coatue, and Ken Fisher all have significant allocations. Alphabet is what billionaires call a value stock disguised in tech clothing. And right now, at these valuations, many see it as one of the most compelling opportunities in the entire market. Stock number 4 is Amazon, ticker AMZN. Amazon has become a billionaire favorite for one primary reason: AWS. Amazon Web Services is the world's largest cloud computing platform, and its growth is re-accelerating in the AI era. This is a company with multiple billion-dollar businesses operating under one roof. AWS revenue grew 20% year over year to $33 billion in one quarter, the fastest growth rate for AWS since 2022. Amazon is also investing heavily in its own custom AI chips called Trainium, which are luring in major clients who want cheaper, faster AI computing. Beyond the cloud, Amazon's advertising business is now a major profit center. Its Prime membership creates one of the stickiest recurring revenue streams in consumer commerce. The institutional confidence has been enormous. Amazon attracted inflows of over $218 billion from institutions in the past year alone. Amazon is held by Bill Ackman at Pershing Square as a high-conviction bet. Chase Coleman at Tiger Global, David Tepper at Appaloosa, Ken Fisher, and Stanley Druckenmiller all hold significant positions. The thesis is straightforward. AWS is the backbone of the AI revolution. Every AI startup, every enterprise building on AI needs cloud infrastructure, and Amazon owns the biggest piece of that infrastructure. Billionaires know this, and they're positioned accordingly. Stock number 5 is the stock that has arguably defined this era of investing: NVIDIA, ticker NVDA. Its GPUs have become the essential infrastructure of the AI revolution. Every major AI model you've heard of was trained on NVIDIA hardware, and the demand shows absolutely no sign of slowing down. In its most recent quarter, NVIDIA reported data center revenue of $51.2 billion and total revenue of $57 billion, up 62% year over year. That kind of growth rate at that scale is almost unheard of. NVIDIA's Blackwell chips were sold out before they even fully launched. Hyperscalers like Microsoft, Google, Amazon, and Meta are all competing fiercely to secure NVIDIA's supply, because without these chips, you cannot build AI at scale. NVIDIA's market cap has grown from $400 billion in 2022 to over $4 trillion today. Of the top 16 hedge funds analyzed, NVIDIA appeared in the top 10 tech holdings of 10 of them. That's near universal conviction among the billionaire class. Ken Fisher, Philippe Laffont, Jeremy Grantham, Stephen Mandel, David Tepper, they're all positioned in NVIDIA. It's not just a chip company. It has become the toll booth on the AI superhighway, and billionaires are paying that toll, gladly. Stock number 6 is Meta Platforms, the company that owns Facebook, Instagram, and WhatsApp, and has completely reinvented itself as an AI powerhouse. Ticker META. Meta had one of the most remarkable corporate turnarounds in stock market history. After losing hundreds of billions in market cap in 2022, Zuckerberg declared it the year of efficiency, and the stock exploded higher. Why do billionaires love Meta? First, the advertising engine. Meta's AI-powered ad system serves 3 billion-plus daily active users with extraordinary targeting precision. That's a near monopolistic position in digital advertising. Second, Llama. Meta's open-source AI models are among the most downloaded frameworks in the world. And third, the buy the dip signal. When Meta dropped almost 20% in Q4 2025, billionaire David Tepper didn't panic. He bought more. That's the kind of conviction that separates elite investors from everyone else. Meta's investor list reads like a who's who of the hedge fund world. Tepper at Appaloosa has a $400 million stake, with Meta as his 5th largest holding. Philippe Laffont, Ken Fisher, Chase Coleman, Bill Ackman, all significant holders. Meta is a company that turned adversity into a reinvention story. Billionaires don't just see a social media company. They see one of the most profitable advertising machines ever built, now turbocharged by AI. And at reasonable valuations, that's a compelling case. Stock number 7 might be the least talked about on this list, but arguably one of the most strategically important companies in the AI ecosystem. That's Broadcom, ticker AVGO. While NVIDIA gets all the headlines, Broadcom is quietly building the networking infrastructure that makes AI data centers function at scale. Broadcom saw $207 billion in institutional inflows in the past 12 months. Over 2,200 of 4,400 institutional holders increased their positions in one quarter. What makes Broadcom special is its custom AI chips, called ASICs. These offer an energy-efficient alternative to NVIDIA's GPUs for specific applications. Google, Meta, and others are working with Broadcom on custom silicon. This means Broadcom benefits whether NVIDIA wins or loses any particular chip battle. And with Wall Street forecasting 29% annual revenue growth over 5 years, the numbers back the conviction. Broadcom's investor list features some of the most sophisticated tech investors in the world. Ken Fisher, Philippe Laffont, Jeremy Grantham, Stephen Mandel with a $600 million stake, and Ray Dalio, all holding Broadcom. This is a company that most retail investors overlook in favor of the flashier NVIDIA headline. But billionaires, they understand that the infrastructure enabling AI, the networking, the custom chips, the connectivity, is just as valuable as the chips themselves. Broadcom is the quiet giant of the AI era. Now, let's pivot to a very different kind of billionaire favorite, one that's been in portfolios for decades, not just quarters. Coca-Cola, ticker KO. Warren Buffett has owned Coca-Cola since the late 1980s, after buying aggressively in the aftermath of the 1987 stock market crash. Today, it's still one of Berkshire's top holdings, at a value of over $21 billion. Why do billionaires love Coca-Cola? First, brand power. Coca-Cola is one of the most recognized brands on Earth, sold in virtually every country. That global distribution network, built over 100 years, is essentially impossible to replicate. Second, dividends. Coca-Cola is a dividend king, having raised its dividend for over 60 consecutive years. Buffett's original investment now generates hundreds of millions in annual dividend income at almost no cost basis. Third, pricing power. Coca-Cola consistently raises prices without losing market share, the hallmark of a truly exceptional business. Coca-Cola is held by Buffett at Berkshire as one of his longest and most cherished positions. The Gates Foundation, Ken Fisher, Ray Dalio, and Seth Klarman all hold it as a defensive anchor. Here's the thing about Coca-Cola. It's not exciting. It doesn't promise to change the world every quarter. But it has delivered reliably for over 60 years. In a market full of uncertainty and volatility, Coca-Cola provides the kind of stability and reliable cash flows that complete a billionaire portfolio. Sometimes, boring is the most profitable thing you can own. Stock number 9 is American Express, ticker AXP. This is one of Warren Buffett's longest-held positions, dating back to the 1990s. American Express represents a very specific kind of business that Buffett has always loved, a financial network with a premium brand, serving an affluent customer base that spends more, defaults less, and stays loyal longer. Why do billionaires love Amex? First, it's both the bank and the network. Unlike Visa or MasterCard, American Express issues its own cards, collects interest, charges premium annual fees, and earns on every transaction. Multiple compounding revenue streams. Second, the affluent cardholder base means lower default rates during recessions and higher spending volumes consistently. Third, Amex is successfully targeting millennials and Gen Z with aspirational cards like the Platinum and Gold, ensuring brand relevance for decades to come. American Express has been held by Buffett at Berkshire for over 30 years, through multiple recessions, market crashes, and economic cycles. That kind of long-term conviction speaks volumes. Bill Ackman, Ken Fisher, Ray Dalio, and David Tepper all hold significant positions. Amex is the kind of company that gets better over time as consumer spending grows globally. The premium cardholder base is a natural hedge against economic downturns. And in an increasingly cashless digital world, American Express's premium network becomes more valuable, not less. For our final stock, I want to highlight something different: Chevron, ticker CVX. While Chevron might seem out of place in a list dominated by tech giants, it's one of Berkshire Hathaway's top holdings, and it signals something important about how the world's smartest investors think about portfolio construction. Why do billionaires love Chevron? First, oil and gas are not going away. Global energy demand remains massive, and integrated oil majors like Chevron generate extraordinary cash flows, even at moderate oil prices. Second, Chevron pays a generous and growing dividend and provides natural inflation protection, critical in a world of tariffs and geopolitical uncertainty. Third, Chevron has a world-class balance sheet that allows it to invest counter-cyclically, buying assets when others are forced to sell. Chevron is held by Buffett at Berkshire as a top 5 position. Ray Dalio holds it as a macro hedge. Ken Fisher, Bill Ackman, and David Tepper all have energy allocations. Here's the key lesson Chevron teaches us. While you bet on the AI future, you also hold companies that thrive in the physical present. Billionaires don't just chase the hot sector. They build balanced conviction portfolios. And Chevron is a reminder of that diversified wisdom. Now, let's wrap up with the 4 big lessons from all of this. So let's zoom out and look at the big picture. What do these 10 stocks tell us about how the world's smartest investors think? Lesson 1. AI is the defining theme of this era. Apple, Microsoft, Alphabet, Amazon, NVIDIA, Broadcom, and even Meta are all central players in the AI revolution. Billionaires aren't betting on hype, they're betting on infrastructure, recurring revenue, and dominant market positions in the AI ecosystem. Lesson 2, moats still matter. Coca-Cola, American Express, and Chevron all represent businesses with deep, durable competitive advantages. These aren't exciting picks, they're reliable ones, and billionaires want both. Lesson 3, buy conviction, not noise. When David Tepper buys more Meta as it drops 20%, or when Warren Buffett holds Coca-Cola through every recession since 1987, they're not reacting to headlines. They're acting on conviction built from deep research. That's the discipline retail investors need to develop. And lesson 4, diversification within conviction. Notice how the same names, Ken Fisher, Ray Dalio, David Tepper, show up across multiple stocks. These aren't portfolio managers who own 500 stocks. They build concentrated portfolios in businesses they deeply understand. That's the Buffett way. Buy fewer things, but know them deeply. Here's your complete billionaire-backed watch list. 10 tickers to add to your research list. AAPL, MSFT, GOOGL, AMZN, NVDA, Meta, AVGO, KO, AXP, and CVX. Now, before you go out and buy every stock on this list, remember the golden rule. Never invest in anything you don't understand yourself. This video is a starting point, a research tool. Use it to identify which companies deserve your deeper research. Read their earnings reports, understand their business models. Make sure they fit your risk tolerance, your time horizon, and your financial goals. Billionaires have access to teams of analysts, proprietary research, and unlimited capital. We don't, but we do have patience. And sometimes, patience is the most powerful edge of all. If you found this video valuable, please hit that like button. It genuinely helps us reach more people who are trying to invest smarter. And if you want more content like this, breaking down what the world's smartest money is doing and why, subscribe and hit the bell so you never miss an episode. Drop a comment below. Which of these 10 stocks are you already watching? Or which surprised you the most? I'd love to hear from you. Until next time, invest wisely, think long-term. See you in the next one.